Americans are saving for retirement at record rates. According to a recent report from Vanguard, 39% of workers increased the percentage of their paycheck that they set aside for their 401k account last year. Yahoo Finance's Kerry Hannon is following this story for us. Kerry, finally, some good news on the retirement front in terms of how much people are saving.
I know. I absolutely love it. I mean, they're looking back at last year, and it was a pretty rough year, wasn't it? I mean, the market volatility, we did see account balances droop. But you know what? The savers, investors in these 401k plans that Vanguard manages, stayed the course. And in fact, the great news is they upped the ante. They 8 and 10 are now enrolled in their plan, and that has just gradually been increasing since 2013, which is great news. And as you mentioned, 4 and 10 increased how much they set aside. I mean, it is really, according to Vanguard, these are record highs of the percentage of your paycheck people are putting aside in these retirement accounts. And that's super positive. And I think that when you combine it, I think the average is like 7.4%. When you combine it, what the employer match is, and this is the cool thing, I think they said 2/3 of their fund companies have 2/3 of the participants are putting enough away to get that match. That is awesome because that is free money, right? That is just a great perk. And so when you put that together, it's like 11.3%. And most financial planners suggest that you set aside anywhere from 12 to 15% of your income for retirement. So people are getting super close. This is very positive in what went on last year. And what I also think is important is, let's say, okay, my gosh, Kerry, why is this happening? Well, the number one reason is auto enrollment. More and more plans and employers are automatically putting people in the 401k plan without as soon as they come on board. And so you don't have to opt into it. You have to opt out of it. And they found that, more people, 93% of people that are automatically enrolled are participating in their retirement plan versus only 70% when you have to make that choice whether to sign up for your retirement plan. You think, oh my gosh, I can't possibly set enough money aside. So this is a very key thing. And the other piece of that is auto escalation. So why we're seeing those increased numbers in the savings is because employers are tacking in this thing that each year they bump you up 1% unless you opt out of it. And often we do decide ourselves to put more aside for our retirement, but at least that little bit more each year really helps you meet your goal.
So, Kerry, you've walked us through the positives of the report. What are some things you found that concerned you?
Yeah, this is the piece that we have to okay, this is good news. People are saving. But there were more people, Vanguard found more people did take hardship loans from their 401ks. And this is not a loan. This is, this is a hardship withdrawal. So it's not a loan. You're actually taking the money out. Some people did take loans. That's true. And you do have a repayment schedule. But when you withdraw, that went up last year. And that's, we can understand why with the inflationary numbers and so forth. And the two main reasons were for housing issues, people facing foreclosure and eviction, and also medical expenses. And so what's concerning to me about that is that when you do withdraw money, you not only pay tax on that money you took out, but you're also paying a 10% penalty if you're younger than 59 and a half. So again, that is a little troubling and indicative of some people were still actually, really facing some headwinds last year.